Hi, everyone, and welcome to another episode of Eventer Talk, brought to you by Eventerprise. And we've got a jam-packed session today. We joined by Good Simica, Eventerprise CEO, and also by Bay Area entrepreneur and angel investor Peter Henry. Welcome, Peter.
Thank you. Glad to be here.
And then we've got Charlie, other co-founder of Eventerprise, sitting in our one office. So today, what we would like to look at is what do angel investors look for in an early stage prospect, and how do you go about things like pitching, scaling, mentoring, etc. Peter, I would like to start with you if you don't mind. Can you give us a little bit of an intro to your background, how you landed up being entangled with Eventerprise?
Well, it was actually a very fortunate set of circumstances. The very short version is surprisingly not that uncommon. I literally wound up meeting Gertz and Birgit and a couple of others, and then eventually Charlie, by way of another investor friend who was actually, did we actually meet at the accelerator first, or did we meet at the cocktail party first? I don't remember which, but it's not that unusual. I mean, the networking aspect of looking for opportunities is one part business and frankly 2 parts social.
Fantastic. And Peter, what's your background in general?
Excuse me, sorry, just trying not to spill my coffee on myself. Well, so I started out originally as a techie way back when. I'm dating myself, but suffice to say I was building computers around the same time as the Altair, designing my own, but wound up in Silicon Valley as a university student, came out here from Boston, grew up out here. After that, worked as a researcher for Hewlett-Packard in their labs, and then also at the Margaret Jacks Hall at the computer science department at Stanford, and then eventually for Apple. And somewhere along the way, besides the good fortune of arriving here at probably the best time in modern history to arrive someplace at the dawn of an age. I mean, I can say I'm one of the very, very few people who have been involved in not one, but at least 2 Seminole Valley companies from their very start, from before they started. Both Cisco and Sun came out of Margaret Jacks Hall, and my research group at HP was, there were 13 of us. I would have been employee number 13 had I not concluded that I needed to finish my education. So how's that for a not quite rags to riches story? But in any event, I went on to enjoy myself in my career, both as a consultant and as a serial entrepreneur, building companies, and to warp ahead quickly. I've now launched 14 companies over the years. Act 5 Ventures being really the 14th startup. I consider it a startup, certainly for the agility that we have to have. And since exiting 2 of my startups, a total of 4 had exits, but the last 2, about 17 years ago, I became an angel investor and mentor to startups because I wanted, in the wake of the first .com meltdown, to give back something, and I saw the opportunity for people to really benefit from the emerging notion of what an angel was, right? Because in the investment world, if you go back 20 or so years, angels, the term really didn't exist, didn't really apply, right? The idea of being an angel was fundamentally just you were an investor and you put money into friends and families, companies, and maybe one more degree of separation. But the thing that was missing in early stage companies, especially as the sort of rise of anyone can launch a company as a mantra became popular, was these are people who thought that all you need to build a business is money. And they were nearly universally wrong about that. And what they really needed was mentorship and guidance. Nearly every startup I see even today, and I look at 300 to 400 deals a year, and less than 1% of them are so well buttoned up that all they really need is money. The rest needs something else, whether it's high-level support at the, in the C-suite, or marketing, or sales, or finance, or if they simply just need good governance, because that's also kind of a missing link. So the idea behind Act 5 is to provide that, and to provide a source of capital that also leverages a 30+ year network of resources in the areas where early stage companies need it the most. And one last thing, this isn't just about a 3-month accelerator program or a 6-month incubator program where you get space and access for an hour a week or an hour or two a month to someone who may or may not be there when you really need them most. This is more about viewing the ecosystem from what it is that an investor needs to have happen most to an early stage investment. And that is to have their money be delivered to an entity that is prepared to deploy it wisely, and have the oversight and the transparency throughout the entire process of developing the business, from seed to early, to pre-A to A stage, to the point where they're sustainable. That's what we do, is we build syndicates around aggregating capital so that we have the economic clout to take the lead as the investor. But then we also, unlike an investment bank, we're also there after the money's deposited in the bank. We have a presence, and we've built a rapport with the team that allows everyone to feel that presence is beneficial. So that's the more long-winded version of how this all evolved. And
thanks. That's a great intro. I love the holistic approach. With other words, it's not just one little segment of getting an early stage company off the ground. It is looking at every single element that leads to success. Well, we've got the Series A raise in place, the $3 million raise in conjunction with your vehicle, Act 5. From your side, why did you choose Eventerprise? What tickled you about it?
So I saw a couple of things, and these are, well, I'm gonna give you two answers to that, and I'll try to be brief. So every investment that I look for as an investor, I think has to have a story told in several specific areas. In fact, it's how Act 5 got its name. I think of it as kind of a play in 5 acts. There has to be a very clear vision of what of what the product or service offering is. What's the solution to a problem? What's the problem? What's the solution? And that has to be clearly articulated. So I call that Act 1. You tell that story well. Act 2, if you will, is the market, and not just the way most young entrepreneurs, and I'm not painting this as an age thing necessarily, but most first-time and early entrepreneurs think in terms of, wow, there are 3 billion internet users in the world. All we have to do is sell something to 0.01% of them, and we'll all be rich. Well, unfortunately, that tells you nothing about what you can really do and who you can really sell to. So the story really has to be told not just in terms of a large market, which a large market is a good thing, but that's what we call TAM, total available market, right? Then there's SAM and SOM, serviceable available market and serviceable obtainable market. And what that amounts to in investor diligence terms is SAM, serviceable available market, is that slice of whatever much larger universe is out there that is really available to your product and or service, as something of interest. But it still doesn't tell the story about how you're going to capture them, because that's all about applying and deploying capital to develop, deliver, and market your offering. So that's SOM, serviceable, obtainable market. What are you going to do with the investment that I'm going to give you right now, not the next round, not the round after that? What are you going to do with this capital? And what are the results that are going to come from that? How much market will you capture? What performance metrics will you be able to, do you anticipate being able to show to tell me that this is worth investing now and will be worth sticking with later? So that's Act 2. Act 3 is the team. Who is the team? Why are they uniquely suited to this particular problem? That was one of, and by the way, all of these areas, to really directly answer your question, the answers to all of these areas that I got from Gertz and Charlie and the team and Birgit and co were really just spot on in terms of understanding all of those elements. And, to the extent that I even wound up pushing back a little and asking questions that helped focus things, in terms of market, there was a lot of responsiveness to being amenable to adjusting and adapting that focus. So that third act, that team act, is in many ways the most important. Is this a group of people that knows their business, knows what they want to do with the business, and has the flexibility and the tenacity and really frankly, the patience and the empathy to be able to track along with it and pivot appropriately? Because very few businesses look back, years later and say, we did exactly what we said we were going to do on day one. There are always a series of pivots along the way. So Act 4, in a nutshell, is the actual plan of how that will happen, the business strategy, what's the operating model, is it a SaaS business, is it a service company, how are the revenues going to flow, and again, telling a clear story. Finally, then, if you get all 4 of those acts nailed down, think Shakespearean, then Act 5 is capital. What's the deal? What will it take to bring all those previous 4 acts together and wrap it up into a success story? So that's how we got our name, and how Eventerprise really impressed me most was that they had a crystal clear understanding of each of those areas and the ability to articulate it very, very well.
Thanks, Peter. And just I suppose also the ability to deliver all those elements in a well-prepared pitch. I think being able to pitch all of those is super important. One thing, a piece of feedback that Götz has given us on a regular basis is that in Silicon Valley and San Francisco, you've got 15 minutes to state your case. And if that. But just with regards to pitching, is there anything interesting that you would like to share? Maybe, from your experience with Götz and the team pitching at 1 or 2 events already since we've teamed up with you.
Best English pitch he has ever heard, at least.
Well, and actually sometimes that can be an asset because it makes people actually listen carefully. Because ironically, the truth of the matter is that you really don't have 15 minutes. You actually have about 2 minutes, and those 2 minutes are the 2 minutes when you lock the listener and the observer of your pitch in to the rest of the story. And if you don't accomplish that right out of the gate with a good, clear articulation of a problem and a solution and an opportunity, then no matter how much more time you have, it starts to sound like the teacher in the Charlie Brown comics, like, wah, 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 after a little bit. So you really don't have the, it's hard to keep the attention of investors, especially at an early stage where, we get inundated, right? Just the presence of your status as an investor, as a source of capital, means that you get, I get 20 pitches a week thrown at me on LinkedIn or an email, most of which I literally can't physically even digest. So there has to be something right up front that grabs you. But beyond that sort of first 2 minutes, there also has to be a kind of a presence in the pitch that says, we're not just here for entertainment. We're here to build a business. We know what we're doing. And by the way, and this is key, we understand the audience today, right? You can, to entrepreneurs out there, you think you put together a pitch deck and you put together what is popular now is the so-called one-page business plan, whether it's really one page or not, and you do all of that. And the problem is the assumption that you're done and that all you need to do now is just go and deliver it to as many people as possible in person or on paper isn't really right either, because as an entrepreneur, you really need to know who you're talking to and what their angle is and what their interest is, right?
Very true.
Knowing who your investors are, knowing who your audience is in a room full of investors is critical. And I actually heard an analogy about this a couple of weeks ago that I really liked, which is, no matter how big the audience is, whether you're speaking to 2 people or 3 people or 50 people or 100 people, the fact is you really need to understand who in that room you expect to really resonate with your offering, because that will not be 100% of a large audience. That might be 10% or 5% of the audience, right? In a room full of 50 people, there really may only be 5 people who are really going to get it and get on board. And you need to understand what it will take to get them on board. So, even if you don't literally know who it is.
Yeah, I just want to chip in with a follow-up on that. So, and follow-up is the key word here. So it's the ability to connect with your audience, and also the skill of following up afterwards.
Yes.
I think that's where a lot of balls get dropped, not following up properly. And I suppose there's a bit of a skill involved in identifying who out of that, like you mentioned, audience of 50 or 100 or so, are the prospects that you should follow up with.
Yeah, absolutely. Well, part of that is, even as an event is happening, you want to kind of be watching the room and seeing who's resonating and know who to follow up with, because, there again, you're not going to be able to pursue every single person in the room, and run them all to ground. There are going to be some where you just know that you didn't really resonate, and that's okay. I mean, these presentations, these pitches, these deals are never going to be for everyone, but for those that you observe and sense, the people who ask questions, the people who are clearly visibly engaged in the room, those are the ones that you start to follow up with, and from there it becomes more of a true sales process. In the classic sense of I'm going to keep following up with you until you tell me to go away or until you write me a check. So.
Which is the game after all.
Yeah.
Thanks, Peter. And good from your side, since you've been at the center of these pitch events, and I think you've got another event tomorrow on as well. How do you find, preparation-wise and delivery-wise, how the pitches are going right now in conjunction with Peter's experience and support, compared to how we used to run them in the past? Your learnings from that.
Yeah, so point number 1 is that it's very important that you have got an interaction which you try to facilitate as efficient as possible. And in that regard, FaceTime is really important. Team is also important in the background, who has to deliver on certain aspects which you are trying to improve on going towards the pitch process, but then also the individual approach towards the event, towards stakeholders plays a huge role. So it's quite instrumental that you have got an alignment process with the people who are connecting you with a kind of also network partner, to bring you in the right way, and to bring you in also hot in a way that it is the right thing to do at the moment, and to then tickle these few people. And for us, that has been quite instrumental how we are dealing with that. Also, I personally believe that is networking also on a level where you have to like those people you are engaging with, who are connecting you. It's not possible to do this when you just say it's a very efficient guy, but you don't really come along with him. So that plays into this as well, and who understands your pain and the pain from the audience. So and connect this together. So in that regard, I believe we see that Peter does a lot of kind of real work in making attempts to support these events, showing his face, being the connecting person, has got the reputation also, which we could now see with his experience, and that helps tremendously. That makes a real huge impact, and it's never stopping. Also, it's an ongoing agile improvement towards getting always better, to also find the difference, by the way, between what you have to say, what they need to hear, and how they need to hear it, also to stay unique, because you don't want to whitewash this out into a process where there's always this element of, what are you now showing me what I don't know yet? And that's an important part of the, I believe, of the pitch as well. And in our case, we have a few of those central arguments which we have worked out and which Peter also endorses, and that's a good way to get this going.
Yeah, I want to add one quick thing to that, which is, the process of circulating around the ecosystem is in and of itself a sort of a holistic process. I mean, it's not just about going to pitch events per se. Circulating, networking, meeting people outside of the formal pitch context is also where companies like Eventerprise, who have a strategy for how they want to develop their business, how we want the business to develop, also means we know what we're going to need along the way in terms of partners, in terms of alliances, in terms of customer referenceability. And as you circulate in the ecosystem, you're constantly exposed to the possibility that you will meet new partners here. I mean, just in the last 3-4 weeks here, we've managed to bump into, and I mean that almost literally, two other companies, two other early stage companies in the space, but in a complementary way. And that represents an opportunity that probably would never have emerged just by sitting back and waiting for the next pitch event.
Very true.
Yeah. Which could isolate you. In other words, you need to look at it, like you said, from a holistic perspective. And sticking with that theme, Silicon Valley has changed over the past few years in some ways that it has not. If I look at the feedback that I've read and received, what would you say right now are the main challenges and opportunities in Silicon Valley?
Well, there are a bunch of them. I mean, ironically, this area is, despite being indisputably sort of the most vibrant and active and opportune place to build a business, just by the sheer density of people, like-minded people, and people doing similar things. It's also in some ways a victim of all of that noise, because it's getting harder and harder for really great ideas to be visible in the noise. I mean, I literally call it a signal to noise problem, where you can have this from an audiophile's perspective, you can have this beautiful symphony playing, but if there's a whole bunch of noise covering it up, finding it is increasingly difficult. That's one thing. The other is that it literally feeds on itself, in that the assumption is that you have to fight against is that what everyone is doing is just taking the idea they had in the shower, going out and raising a whole bunch of money and becoming a unicorn. That nothing could be further from the truth. And the real truth is that, for every unicorn, or even for every moderate success story, what you don't read about in the media is the 100 to 1,000 that failed trying. So the hard part here is identifying good opportunities, and then also identifying how you de-risk those opportunities so that you have a much greater probability of success. I mean, keep in mind that the early stage ecosystem, on average, is a 90% failure ecosystem. 90% of startups fail. But once you understand why that happens and how to de-risk some of those elements, then you can take a business that clearly makes sense, that clearly represents a good vision and a good market, and has a great team, and has built out a model that can work. Then you can identify, well, what can go wrong, and how can we mitigate that up front, or how can we prepare ourselves to address those risks. And it's getting harder and harder to do that, partly because of the noise, and partly because of the sheer amount of money sometimes being thrown at ideas that ultimately turn out to be in vain but disrupt things, right? I mean, we if you look at the Internet of Things space, the IoT space, we had a wave over the last couple of years where literally anybody that showed up could raise a few $1 million, and once again, more like 95% of the time, all of that went to waste. But it created the impression that this is what you should do, that you should go and raise a whole lot of money and shoot for the moon and know that you're going to walk away disappointed more often than not. And I've really evangelized both with Eventerprise and with my other portfolio companies a more stair-step approach where you know what you really want to do in the long run, and it's always good to have that long view. But in terms of what you're doing today and what capital you're raising today, you actually trim it back to something where you have much, much higher confidence of being able to take an investment of X, do something with it, have measurable results, then go after another round of Y with a much better valuation and, again, much more confidence. Because that 95% failure rate, if you plot it over time, nearly all of it happens in the first few months of deploying capital. So if you, so it's great for people that have huge checkbooks that want to just take wild shots, but we want to do it a little differently and a little more intelligently.
Now, as we now see with artificial intelligence and blockchain to a certain extent as well, it's almost it's flavor of the tech flavor of the month.
Yeah.
Peter, from your perspective,
I could go on and on about that because my graduate degree is in AI, and I can't tell you how many AI companies I have that literally just come in and stick the initials into every other sentence as if somehow they will magically perform as a result.
Conjure up the results, yeah. How do you see the roadmap ahead for Eventerprise? And I mean, thank you for the compliment about the fact that we've got our ducks in a row when it comes to the team, the tech, and having a real concrete go-to-market strategy in place. At the stage where we're at now, where would you say should be the next 2 or 3 focus areas for us?
Well, so the answer is to align it with some of the sort of hard and fast notions of how you show evidence of proper execution. And up till now, it's gone very, very well, much, much better than I think nearly any other company I've looked at in terms of great execution around building the team in particular. You put a lot of time and energy into that. And the team is terrific. And by the way, this is no small feat. Gertz and I were just talking about this yesterday. This is no small feat to pull off on a global scale for a small distributed company. I mean, making that model work as well as it clearly does is very, very rare and helps you optimize in ways that you couldn't do here. But in terms of next steps, the investment community loves a good idea as long as it's followed up with today's notion of traction, right? And traction can be, and I'll put that in terms of how we articulate the round, because the terminology sometimes floats around, but when you're a seed company, you're still in the ideation stage and the development stage for building out your product or offering, and your investors are attuned to that. That's what they're looking for, is getting in at the ideation stage. As you migrate to late seed and into an A round, 2 things are changing simultaneously. One is the expectation is as you approach an A round in the future, you approach it with traction, whether that's measured in revenue, one benchmark, but not the only one is, can you show revenue run rate of $1 million a year, $1 million ARR for at least 2 or 3 quarters prior, so that we can see that there's evidence of traction. There are other metrics, whether it's user engagement, user growth, community growth, and that sort of thing. But here's the interesting thing. as you go through those processes of showing that kind of progress and that kind of traction, your audience of investors is also changing. You're no longer interesting to that first round of investors, or as interesting. They may follow along if they're already in, but you're really talking to a completely different audience at each stage. And so you have to, you really have to, in that sense, go back through the cycle and curate your targets. This is the other thing that's difficult in this environment, is that everybody assumes that an investor is just an investor. But I personally believe that you need to figure out who your best investor targets are and not waste your time on the others.
Absolutely. Thanks, Peter. That makes a lot of sense. Charlie, you've been quiet so far, so I'm going to pass this one on to you. Just in concrete terms, what is our opportunity for potential investors out there? Would you mind just framing it for the audience?
Just rephrase that, Mark, again. Sorry.
I'm just asking you to frame for our audience what our investment opportunity consists of.
In terms of the deal that we're putting together.
Correct, the particulars.
Right, okay. So thank you, Mark. And again, this has been dealt with in conjunction with discussing this with Peter, and this has not been something that we have thumb-sucked. So in order to deliver on our promises to ourselves and to the platform's capabilities, we have had to do this in stages. So I think the question, or the answer to your question, is building our raise into two separate components. The first part of that is what we would call a convertible late stage commitment. Essentially, what that is funding and the resources with which to execute on our most immediate plan of action to get and deliver our promise. The second part of the investment is, of course, the bulk of the resource, which is, in fact, what will contribute to the equity and what ultimately will give us the initial valuation. So, in a nutshell, it's two-pronged. Part of it made up in a convertible go-to-market set of resources to help you really, if you turbo charge the plan of action, and then the second part is obviously to have the equity in the business as well. So
there are two different opportunities for someone to get involved from an investment perspective. Thanks, Absolutely. Charlie. And then just before I know, sorry, Charlie.
Can I just ask Peter just one other question? So, Peter, you were very complimentary about the team, and that's we're obviously extremely grateful to that. But I think we've built the team for exactly that purpose. What I want to press is, what are the trending elements, if you like, or components of a team are being seized upon in Silicon Valley? We are a very multicultural team, if you like, from many corners of the world. But we hear a lot of trending elements that investors are seizing on and trying to sort of make sure that teams have got, if you like. Do you want to elaborate a little bit on that and whether or not that's myth or fable?
Well, I think everybody has slightly different notions based on their own experience. I mean, one thing I think the better, more savvy investors do is they tap the experience of themselves and their immediate colleagues, their closest business friends, to really formulate an idea of what made for success, because obviously, luck and timing always play a big factor. I always say it's the high order coefficient in the equation. But those two things, luck and timing, also favor the prepared and the flexible. So I can't necessarily speak for the whole valley for sure, but I can say that my criteria and that of most of the people I co-invest with is that we're looking for a team that has really maybe three critical characteristics. One is, of course, just clarity of vision and an understanding that even the clearest vision still has to evolve over time and evolve through the process of being built out and exposed to a market. So think of that as sort of clarity and flexibility combined. The other trait, frankly, is really being able to lead their team and lead from both the front and the side and from behind, as the case may be, because every team has, at different times, people who are going to be out in front, and it's not an ego thing. You really have to check your ego at the door, which is very hard to do when you've just landed millions of dollars of venture capital. But being able to do that is crucial. And then, and the other is just an absolute conviction that you're going to navigate this course, come hell or high water, and you go in prepared to navigate it with the tools and instruments, but that are required of that. By the way, there are some more brass tacks things that I think are really critical. One is at the top, in the C-suite, everybody in the room really has to have some reasonable understanding of every aspect of building a business. To me, that experience is indispensable. It's why, and again, I don't want to make this about an age thing, but it's why most of the portfolio companies that I see raising money at the best valuations have teams that have a fair amount of experience, whether it's gray-haired experience or just they started doing things when they were 15 and now they're on to their third or fourth venture and they've learned some lessons. Those are all really critical elements. Beyond that, there's an X factor. There's a fundamental X factor that I think you don't see until you've just watched a team in action. And this, to me, this is, sort of a secret sauce, I think, among some of the best investors I know, which is you can watch the pitch, you can scrutinize the model, you can survey the market, you can conclude that everything looks great, but unless you have put time and effort into watching the team function as a team and as a group of real live human beings interacting and, facing adversity and enjoying successes, and do that for a while, until you do that, you don't have a sense of whether this group is really fully put together, which is why, for me, spending this much time as I have over the last several months with the entire Eventerprise team, Charlie and Gertz and Birgit and Barry and you and all of us, that is indispensable. Because now I'm comfortable as an investor, which means I'm comfortable telling everybody else that they should be investing, because this isn't just the deal of the day. This is something that has really, has really made it through all of the gauntlet as far as we can take it until we actually move to the investment stage.
Great, thank you, Peter. That was well answered. Thank you very much indeed.
Okay. Well, just before we wrap up, Götz, any last words from you?
No, that was, I'm for a change, a little bit more quiet than normal. So,
yeah, Peter, thank you so much. Sorry, Götz, you want to say something?
Yeah, I wanted actually to echo what you will say now, because I can see the future a little bit, and that will be that I really appreciate the way how you describe what I experience here every day, and through a very interesting summary. And I feel that this is very valuable, far beyond us. It's just a really good documentation for people who are doing what we are doing, and what it takes out of the perspective of an investor and also someone who knows how investment has to be steered. Thank you.
Thank you, Peter, for your eloquent and succinct contribution today. I think it's for someone like myself, it adds a lot of clarity about the thinking behind the partnership. that we have with you currently, and also the broader perspective from, what are the trends, what's going on. And I hope everybody listening and watching this today also got something out of it. I appreciate it. I know you're very busy. Thank you very much. I hope we talk soon.
Can I throw in one quick closing comment that I think would be valuable to entrepreneurs out there looking to identify, how to model this process in a similar way. The one thing that I think is new and different, not literally new, but becoming more and more clearly an advantage in the way we're putting this opportunity together with Eventerprise as the company, investors out there being picked, chosen, curated, networked, however you want to describe it, and with Act 5 as sort of a professional entity in the middle, but not one that's biased toward one side or the other. I mean, when you think about the idea of syndicating investments, in the old days, in the billion-dollar world of syndication, the idea was just aggregate enough capital to be able to squeeze blood from a stone in terms of the opportunity. I don't believe in that. I believe that the right way to do that is to create a structure that is that aligns everybody's interests and benefits everybody in the end, so that as sort of a connected party in the middle, we can act on behalf of both sides, and make sure that everything actually works well. And that's not trivial, in the sense that most entrepreneurs, here we have a team of very seasoned professionals who are comfortable dealing with investors and still there's that investor versus entrepreneur interaction that's different than what happens when you have a conversation investor to investor, which and we expect to make the most of that, and the benefit of that carries through even after the investment, where instead of having 20 or 30 individual investors in the company that the company now has to deal with, you have a single entity that concentrates all of that, if you will, investor energy into some place that no longer represents a large chunk of time and overhead for the company to manage. That is a trend you're going to see grow exponentially over the next few years. That's my prediction, because a lot of companies have gone out, in the era of safe notes and everything else, and raised capital from anyone that would write even the most trivial check, and now they're reckoning with it. And by the way, late round investors absolutely hate to see that. The last thing they want to do is deal with taking out your 5 cousins and 3 uncles or negotiating with them. So it's a bit of a left turn, but I wanted to just point out that we've structured this relationship around creating a point of benefit for everyone and aligning all of those interests. Everybody's, one way or the other, everybody's outcomes are all aligned. And I think that's going to be, that's the
win-win.
It should be.
Thank you, Peter. And I could happily sit here and pick your brain for the rest of today, but we've got a platform to build, so I need to get on with that. But if anyone wants to get in touch with either Peter or with ourselves about anything that we discussed today, and of course the Eventerprise investment opportunities and partnership opportunities, Aquina, who's behind the screens, will pop a few links in the chat box. You're welcome to click on them, and do get in touch if there's anything else you would like to know. And then lastly, another big thank you, Peter, for regaling us today with your wisdom. And thank you, Charlie. And thank you, Goods. Goods and Peter, I know you're just kicking off your day now. So have a fantastic day, and thank you so much.
Great. Well, thank you.